Most traders begin at the smallest chart because they believe speed is an advantage. They think the 5-minute chart will whisper secrets the monthly chart cannot see. I thought that once too. It cost me years, fortunes made and lost, and lessons that only pain can teach. The market does not reward speed. It rewards alignment. It rewards patience. And above all, it rewards those who understand where they are standing in the larger structure before they take a single step. If you want to build something that lasts, you do not start with the bricks. You start with the land. The monthly chart is the land. It tells you whether you are building on solid ground or on sand that will swallow your work the moment the tide turns. Every great move I ever rode, every fortune I ever made, was already written in broad strokes, long before the tape began to flicker with noise. The mistake of most traders today is that they want precision without perspective. Precision without perspective is nothing more than well-executed ignorance. When I study a market, I begin where time moves slowest. The monthly chart strips away emotion, rumor, and the chatter of the day. It shows you who is in control. Not today, not this hour. But in the grand contest between accumulation and distribution, trends are born here, not on the 5-minute chart. If a market has been advancing steadily for months and years, it tells you that powerful interests are at work, building positions patiently. You do not fight that. You align with it. If a market has been declining on a monthly basis, then every rally on a small chart is suspect, no matter how pretty it looks. Many traders ask me how to find the perfect entry. They ask the wrong question. The better question is how to avoid being on the wrong side of the market. The monthly chart answers that. It keeps you from doing foolish things with great confidence. It tells you the primary direction, and once you know that, half the battle is already won. The market only has 3 states: advancing, declining, or resting. Your job is not to predict which one comes next, but to recognize which one you are in. From the monthly, I move to the weekly chart. Here the market begins to speak with a clearer voice. The weekly chart shows you the rhythm of the trend. It shows you whether advances are being made easily or with effort, whether declines are sharp and fearful or orderly and controlled. I learned long ago that the character of price movement matters as much as direction. A strong trend advances on bad news and pauses on good news. A weak trend needs good news just to stand still. The weekly chart teaches you to see this difference. This is where patience is tested. Most traders want action. The weekly chart often offers none. It offers long stretches of boredom punctuated by moments of clarity. But boredom is a small price to pay for clarity. When the weekly chart confirms what the monthly chart is telling you, you are no longer guessing. You are preparing. You are positioning yourself like a general studying the terrain before the battle begins. Then comes the daily chart. This is where most traders mistakenly begin, and some never look beyond it. The daily chart is useful, but only if you already know the larger direction. Without that context, it becomes a source of endless confusion. One day looks bullish, the next bearish, and the trader is whipped back and forth, mistaking movement for meaning. I have seen more accounts destroyed by daily indecision than by any single bad trade. Used properly, the daily chart refines your understanding. It shows you the structure of swings within the larger trend, higher highs and higher lows in an advancing market, lower highs and lower lows in a declining one. It also shows you where risk can be defined. Good trading is not about certainty, it is about control. Control of risk, control of emotion, control of position size. The daily chart helps you see where you are wrong before you are ruined. When the daily chart aligns with the weekly and monthly, you have what most traders never experience: confidence rooted in structure, not hope. This confidence is quiet. It does not rush. It does not chase. It waits. Waiting is not a passive act in trading. It is an aggressive discipline. The market pays a premium to those who can wait for alignment across time. Only after all this do I allow myself to look at the smaller charts, the 4-hour, the 1-hour, and yes, eventually the 5-minute. But understand this clearly. The lower time frames are not for decision-making, they are for execution. This distinction will save you years of frustration. The smaller the time frame, the more noise it contains. Noise is not information. It is distraction masquerading as opportunity. The 5-minute chart is a magnifying glass. It shows you the smallest fluctuations, the footprints of short-term traders, algorithms, and emotional reactions. If you stare at it without a plan, it will hypnotize you. It will convince you that every wiggle matters. It does not. What matters is whether that wiggle is occurring in harmony with the larger trend. A pullback on a 5-minute chart means nothing if it is against a powerful weekly advance. It means everything if it is a continuation entry in the direction of the dominant trend. I learned this lesson the hard way. There were times when I was right about the market but wrong about the timing, and the market punished me anyway. Timing without direction is gambling. Direction without timing is torture. The art of trading lies in combining the two, and that combination only comes from working down through the time frames with discipline. When you build from the monthly to the 5-minute, you are not looking for more trades. You are looking for better trades. Fewer trades, taken with greater conviction, in alignment with forces larger than yourself. This is how trading becomes a business instead of a series of emotional decisions. This is how you stop reacting and start operating. Most losses do not come from bad analysis. They come from impatience. The trader sees a move beginning on a small chart and wants to be part of it immediately. He forgets to ask whether the larger players care. He forgets to ask whether the market has room to move or whether it is pressing against long-term resistance. The monthly and weekly charts answer these questions before money is put at risk. Ignore them, and the market will teach you humility. Building a trading empire is not about finding a magical indicator or a clever pattern. I never knew a man who made a fortune from cleverness alone. Fortunes are made from understanding, discipline, and the ability to sit still when everyone else is in a hurry. Your strategy must be built like a pyramid, wide at the base and narrow at the top. The base is the higher time frames. If that base is weak, everything above it will collapse. In this first part, I want you to take one thing seriously. Stop starting at the 5-minute chart. Start at the monthly. Ask yourself one simple question. Who is winning the long-term battle in this market? When you can answer that without hesitation, then and only then should you concern yourself with entries, stops, and targets. The market does not owe you opportunity every day. It rewards preparation when opportunity finally appears. I will stop here. When you are ready, tell me to continue, and I will show you how to move with precision from the higher time frames down to the 5-minute chart without losing your discipline, your capital, or your mind. Once the higher time frames have spoken, your task becomes simpler, though never easy. Simpler because confusion has been reduced. Harder because discipline is now required. Most traders fail not because they do not know what to do, but because they cannot bring themselves to do it consistently. The market is a mirror. It reflects impatience, fear, and overconfidence with brutal honesty. When you work down from the monthly and weekly charts, you remove many excuses the mind likes to invent. Let us assume the monthly trend is clear. The market is advancing, and it has been doing so in an orderly fashion. The weekly confirms this advance, showing higher highs and higher lows, with pullbacks that are corrective rather than destructive. At this point, your bias is set. You are not interested in selling tops or proving how clever you are. You are interested in participating in the continuation of strength. This mindset alone will eliminate half of the trades that drain most accounts. Now the daily chart becomes your map. Here you observe how the market breathes. Advancing markets do not move in straight lines. They surge, they pause, they retrace, and then they move again. The daily chart shows you these pauses. It shows you where late buyers become anxious and where weak holders are shaken out. These areas of hesitation are not warnings. They are opportunities, but only if you recognize them for what they are. I made my greatest profits not by buying excitement, but by buying discomfort in the direction of the primary trend. The daily pullback feels uncomfortable because it moves against your position. That discomfort is the price of admission. If you wait for comfort, you will buy late, when risk is highest and reward is smallest. The daily chart helps you identify where that discomfort is controlled, where a pullback remains a pullback and does not become a reversal. This is where risk must be defined with precision. A trader without a predefined point of being wrong is not a trader at all. He is a hopeful observer with money at stake. On the daily chart, you can see where structure breaks. You can see where the market would be telling you that your assumption was incorrect. That point is not an enemy. It is a friend. It allows you to participate without exposing yourself to ruin. Once the daily setup is in place, you move lower. The 4-hour and 1-hour charts are your tools for refinement. They show you the internal mechanics of the daily move. They show you how the market transitions from selling pressure back into buying pressure within an uptrend, or vice versa in a downtrend. This is where patience is again tested. The market may take hours or days to reveal its hand. Your job is not to force an entry, but to recognize one when it appears. On these intermediate time frames, you are looking for harmony. The pullback slows. The swings become smaller. Selling pressure loses urgency. These are not signals in isolation. They are confirmations that the larger narrative remains intact. Many traders try to turn these observations into rigid rules. That is a mistake. Trading is not a checklist. It is a reading of conditions. Rules keep you safe, but understanding makes you profitable. Only now do you look at the 5-minute chart. By the time you arrive here, the decision has already been made. You know the direction. You know the context. You know where you are wrong. The 5-minute chart's sole purpose is to help you enter with efficiency. It helps you avoid chasing. It helps you align your entry with a moment when risk is smallest relative to potential reward. On the 5-minute chart, you will see many movements that look important and are not. Ignore them. You are not here to trade the 5-minute trend. You are here to enter a daily or weekly idea with minimal exposure. This is a critical distinction. When traders fail at lower time frames, it is usually because they have elevated noise to the status of signal. The market loves to punish that mistake. The proper use of the 5-minute chart feels almost boring. You wait for price to stop going against you and begin moving back in the direction of the higher time frame bias. That may be a small consolidation, a brief pause, or a subtle shift in momentum. It will not announce itself with fireworks. If you need excitement, you are in the wrong business. Execution should be calm. Size should be appropriate. I cannot stress this enough. Position size is the silent partner in every trade. You can be right and still go broke if your size is wrong. Building an empire is not about one trade. It is about surviving long enough for the law of large numbers to work in your favor. That requires restraint, especially after a string of wins. Success has ruined more traders than failure ever did. Once in the trade, management becomes the final test of discipline. Most traders obsess over entries and neglect exits. This is backward. The exit determines the outcome. When you trade in alignment with the higher time frames, you must give the market room to work. Small charts will try to scare you out. They will show you pullbacks that look ominous but mean nothing in the larger context. If you let the 5-minute chart manage a weekly idea, you will never capture a meaningful move. This does not mean ignoring risk. It means respecting structure. As the market moves in your favor, the daily and weekly charts will provide natural areas to adjust risk. Higher lows form, breakouts hold. These are the places to make decisions, not at every flicker on a small chart. Trading is an exercise in selective attention. What you choose to ignore is as important as what you choose to watch. I have been asked many times how to handle losses. The answer is simple, though not easy. Losses are business expenses. They are proof that you are participating. The danger lies not in losing, but in changing your method after a loss. If your process is sound and your execution disciplined, a loss means nothing beyond its financial impact. If your process is flawed, no amount of winning will save you in the long run. Building your trading empire is not about domination, it is about alignment. Alignment with the market's primary direction, alignment between time frames, alignment between your strategy and your temperament. Some men are suited to fast decisions, others to slow ones. The market accommodates both, but it punishes confusion. Know who you are and build your approach accordingly. The greatest edge you can develop is not analytical, it is emotional. The ability to wait when there is nothing to do, the ability to act decisively when the moment arrives, the ability to remain unmoved by the opinions of others and the noise of the day. When you build from the monthly chart down to the 5-minute, you are training this edge every day. You are learning to think in probabilities instead of predictions. Remember this above all. The market does not care about your goals, your needs, or your timeline. It moves according to forces far larger than any individual trader. Your success depends on your willingness to respect that reality. Start where the big money starts. Let time work for you instead of against you. Build your strategy from the top down and execute from the bottom up. Do this long enough, with discipline and humility, and you will discover something most traders never do. Trading stops feeling like a battle. It becomes a craft, quiet, demanding, and deeply rewarding to those who approach it with patience and respect.